It is March the 13th. Michael Vaughan with Brian Acker. Brian, cast your mind back 3 years. Remember? It was 3 years ago, March the 9th, the bottom.
That was an amazing day. I'll remember that for the rest of my life. How's that?
S&P 666.
The sign of the devil. Lazarus. No, it was quite a day, but that might have been the generational bottom of all time.
Yeah. Well, but we're back. We're back. 3 years later.
3 years later, if people look at our website, at our 3-year number, especially in the U.S., 30% compounded from that particular day. I think we're in the top 3 or 4 funds in the 3-year category. One thing we don't do, as people know, is we don't time the market.
Yep.
And it's a good thing because we actually caught the bottom. A lot of people didn't catch that bottom. So anyway, a lot of gray hair because of it, but anyway, we're glad it's over.
Okay, well it is, and there are signs that we're coming back to normal. I mean, the banks got us into this mess.
Banks got us in. The banks will have to lead us out in terms of normalcy, and we are seeing signs of that. Certainly, I've been writing about Goldman Sachs, what we say coming out of the blue, JP Morgan. These are big money center banks. For instance, JP Morgan has $2.2 trillion of assets. Goldman about $950 billion. But what it's saying is those assets, those stated assets on the balance sheet, are gaining in value. And this is a relatively recent phenomenon over the last couple months, whereas these companies have been trading what we, again we call it in the blue, that the market didn't even believe the stated value of these assets on the bank's balance sheet.
Well, it's an asset quality issue. I mean, JP Morgan's in your top 10.
Absolutely.
You must think their balance sheet is a little bit better.
It's getting better, and the market is recognizing that. It's not really an earnings story, it's a balance sheet story. So in order for this bull market, now again, I think we've been in a bull market for 3 years with our 30% return, but again, when you look at asset quality, it's going up, and that's what this economy needs.
Okay, Greece has been the big terror. They wrote off 125 billion euros.
And the press isn't really covering this, but this is, to me, an amazing story. And I've been saying, and I said it on the video, I think some time ago, this is really a math problem.
Yep.
So people came together, European people obviously came together, and they solved it by math. And with that,
haircuts. I solved with haircuts.
But this is the first time since 2008 that we've actually taken haircuts on debt. Keep in mind the bailouts of 2008 protected the creditors of the banks, etc. To much of the criticism of individuals. But this is the first time in a meaningful way we've actually written debt off, and that is so positive. Now we're writing debt off, as people may not know, every year because of inflation.
Right.
Inflation is actually running about probably 3.5%. So that is bringing that debt down. But this is an actual write-off, which is, I think, is very, very positive.
So what's your outlook for Greece?
I'd buy real estate in Greece. If I had $1 billion portfolio, I'd make over there real quick and buy blocks of stuff. I mean, there's a few Canadians actually did it with Argentina when Argentina went down. So they're going to be still part of the euro. You have European law. You got the European the euro in terms of currency. I think capital will go rushing in there and try to get some cheap real estate.
There's a big rally in large cap tech. What's going on?
We've been overweight in large cap tech, and a lot of our returns have come from there, and we still see it further. I think and I've written about this, that there is a bull market starting in social media. What do we mean by social media? I mean Facebook, we mean LinkedIn.
Model price guy.
On the blog, but again, it's the new generation, if you will. This is like 12 years ago, and and again, the picks and shovels of the internet, Microsoft,
Yeah.
Oracle, Cisco. We're
I
going to
see.
need more routers, switches.
These aren't
software.
startup, pet food companies over the internet.
These are substantial companies with a lot of cash. They don't know what to do with the cash.
Yeah.
And so, the NASDAQ a few months ago hit an 11-year high.
Yeah.
So something's going on. Now, these are pieces of a puzzle coming together. These are early days. But keep in mind, the Fed, all the world central bankers have created all this money, trillions and trillions of dollars of money just sitting there. It's estimated there's over $30 trillion of cash in the world.
Ouch.
Looking for rates of return.
Yeah.
And when that cash gets mobilized, and again, all it takes is rates of return comparisons in terms of what cash is earning and what obviously stocks are earning, then we'll see a changing of the tide.
Well, you're looking for a positive year, but of course we were last year too, until Europe derailed it.
Yeah, we were up 10% last a year ago, April.
Yeah.
Everything was going well until August of last year. Then the whole European thing came. But the European thing was always to us. It's about math.
Yeah.
And if people can come together, it's not like we're firing around nuclear warheads or anything. It's nothing that's going to devastate humankind. It's really about math and people agreeing on the math and going forward. So, but the people of Europe, some of those countries like in Greece and Ireland, GDP is falling off a cliff. Now they're taking a lot of pain, but I think they want to continue in the euro and they want to prosper. They want their kids to prosper. And again, I think it's about the math. So we're slowly coming out. So, but it's very, very easy to be positive because you're seeing signs of spring everywhere.
Always interesting to talk with you. I like the looks of the charts on your website, and I'll be in to see you in April. Thanks for your time, Brian.